Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update. And this is for Monday, August 20th, 2018, getting on to 2:45 p.m. Central Daylight Time. You know, in the gold market, I've been wondering who's been doing the selling under the 1200 level. And I read a news report today from another newsletter writer that was talking about Venezuela and Turkey. And very interesting. And he brought up a very good point. At the end of the second quarter of this year, Turkey supposedly, according to him, had 582 metric tons of gold. They're down now in tonnage to about 232. Venezuela in 2015 had about 300 and some odd metric tons of gold. They're down to 150. Those two countries have been under pressure with their currencies. We know Venezuela is basically a bankrupt country. Eventually somebody will probably go after their sovereign gold. In Turkey, the problem is they've been trying to avoid interest rates, and if you go to TikTok on Bloomberg, I did a piece about that this afternoon. And what I think has been going on is Turkey's trying to avoid having an interest rate hike. They're bringing in funds from Qatar. They've obviously, if this data is correct, sold off 300 metric tons of gold, and that would be to shore up their currency, which has been under a 40% plunge this year, whereas Venezuela just took 5 zeros off their currency. It's working so well that none of the stores open today because they don't know what it's worth. Get another run on their currency and say goodbye to that gold. Eventually, if the gold market lets supply not hit it, maybe that forms an eventual bottom. Something I'm just bringing up. Also today, you did not see over the weekend the Trump administration go after Turkey, even though Pastor, I think it's Brunson, was not let go. The court rejected everything. Don't know why that is. I personally thought the Trump administration would go at it. They did not. I was wrong. The dollar fell, and most currencies up against the dollar. When we take a look at gold, you can see that the market is getting a bounce to start the week. It is up roughly $13.50 for the week. The downtrend line right here is yet to be tested. We'll see if that comes into play. That number comes in closer to the 1200 level. As you can see on the swing lines, you've got the lower highs, lower lows. You'd have to take out 1205.80 to break the pattern of lower highs, lower lows, with 1213.80 being what? Being that 18-day average of closes. And that probably is going to get very close when the market reopens to that downtrend line. When we take a look at what the market's done in Bollinger Bands, it has finally popped back over it. So I'm going to look for resistance wherever that 18-day average of closes is. And momentum lost the embedded reading. Do you see this? This was an embedded reading, and the market on Friday closed just a fraction over it. Closing a fraction over it's closing over it. If that occurs, it puts into play that price and the 18-day average of closes make a run at each other, and you've begun that process. In the gold ETF, the same thing is occurring. You're losing the embedded reading. Anytime the number gets back over 20 after being under it for several days or more, as this was, that means that phase of the market is ended. When it ends, often, not always, price and the 18-day average make a run at each other. That's going on there. You're not quite there yet in GDX. Depends where the market closes today and how it reopens tomorrow. I would say that with the other two of the three losing their embedded reading, I would expect to see the shorts coming out of some of their position in the GDX right here. The gold-silver ratio still does not favor a bottom in metals. To get that bottom, typically you come the other way, where gold starts losing to the silver market. You're not doing that. Yes, silver's back over the upper Bollinger Band, but it's still just an oversold territory. The trend remains down. Resistance back at 1521, but to get to that point, you'd have to break the downtrend by taking out the last rally high of 1510.5, which would give you a pattern of a lower low and potentially a higher high. In the copper market, we saw that in Chile, the miners and the workers have gotten together and they are not going to see a strike there. They've reached a collective bargaining agreement. In addition, the amount of metal on the London Metal Exchange has seen a dramatic shift downwards. In other words, during this break, a lot of metal's been being used and taken away from that, and that's giving a little bounce to the market. Is that a trend change? It isn't. But is there a trend? There isn't. Yes, the market was in a general sell-off, but you never embedded. You got oversold. You're getting a bounce. Resistance could be back up at that 18-day average of closes in red at 272.90. In the platinum market, you have a pattern and have had one of a higher high and a lower low on a breakout to the downside. Here you had sideways action. From that, you often get a move. Now, it could be up or down, but you often get a move. You had your first breakout on this market on Monday, the 13th, and from there, the market just started letting go. That was the move, and now the market's starting to get the short covering off of that. The opposite happened. Well, it's not totally opposite, but what the opposite is here is you rallied enough in the palladium market to get over the last rally high. 896 is roughly the 18-day average of closes. It's what you hit today, and the market ran into its resistance at that point. And as you can see, the dollar's in a correction now. Lost its embedded reading, could fall back to the 18-day average to regroup and make a decision what's next. It had its breakout. This breakout occurred from this sideways action, and the market did see a heck of a run-up off of that, and that run-up about 200 points later seems now to have run out of momentum and ready to see more of a price correction. I write about all this in my market research. I'll give you the ideas like I wrote today for my research people on this gold that I just told you about. You get facts like that from me. Then I'll explain the Turkish environment tonight, give you ideas as to what I see, what the seasonals are in gold. But it's not only gold. I write on the copper market, the palladium market, on all these markets where I see there's an opportunity. If you'd like to see what I do, it's pretty simple. To get a free trial, give us a call. You can go to our website. I want to remind you, I've also sent out an ad to you for a very limited offer. It's a summer special and summer's ending. It's 2 for 1, your first 2 months for the price of 1. You can either choose my research with trade commentary or commentary only. You're going to get 2 for 1. I think it's a great deal. Why not take a look at it? You can also click up here if you're watching me on YouTube. That'll take you to that as well. Look for that email in your inbox. If you are on my mailing list for occasional offers, you should have gotten it this morning. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.